Welcome at forextrading.com. Today is 15th December 2010. We're going to take a look at pound trade example. So right now, today in daily morning analysis, I was telling about the possibility of pound breaking down from this channel to the downside. We were only waiting if this breakout will be for real or if it will be a fake breakout. So we had two options. The fake breakout occur and the price will come back to the channel, or the price move down and more to the downside, making a chance to go short aggressively. If we take a look at a euro dollar example, we see there are stronger trends right now in pound. I'm talking about the long position as well and the short right now at recent time at 4-hour chart. So the pound is attractive in some moments. But let's take a look at the close example. What happened here? Right now we're looking at 4-hour chart. Let's take a look at 30-minute chart. We are talking about this moment when the price break through at a 4-hour chart. I'm talking about exactly about this moment right here. So at 30-minute chart, we see the price met this 57.17 level for a first, second, and third time. And it could happen that the price action could show us that it will be moving higher and higher aggressively after meeting this point in this way. But it didn't happen. The price reached last support resistance right here, and it started to move lower and lower. You see this point right here happened to be as well support resistance at some other places like here before and later on, not including those two shadows, which is also important support resistance of this line. Only this was a kind of breaking into the fake side. So we came back to the downside again even more aggressively. So in one 30-minute candle, the price came through and reached the point of below 30 points, which is pretty much important to do the break below 20-30 points of this line. So I was waiting for the situation to happen. If we can zoom right now, let's take a closer look. We are talking about this moment. So I was taking a look if below this 57.17 we're gonna see another fake breakout. I mean the price after going down will come back to the comfortable zone, aggressively going higher and higher. But it didn't happen. The price came up a little bit but didn't make to 57.17 point and started to stop and fall again. This was a beautiful situation to come into the market if somebody didn't make it at the beginning. Usually I'm saying that market is always making another chance or the primary chance to enter the market after a little breath. I'm telling you about those 25-30 points at euro dollar and pound dollar chart like this one. Market took a little breath. Additionally, testing the support resistance line from the down movement. So we are testing this line from this down movement direction. So it's different kind of testing than just breaking this point for a first time. So it's kind of second testing which didn't came through to the upside. It went another time to the downside move. So this point right here was a beautiful place, beautiful setup to enter the market. And I've marked this place with this bird, and we could make at least 60-70 points taking from the market after getting in into this transaction. And stop loss, I've marked this high because really if we are matching to this market movement, we are probably want to catch a bigger movement than just 20, 30, 50, 70 pips. So we are talking about 4-hour chart breakouts. So the safe stop loss should be somewhere around here, above last support resistance. But it doesn't mean I'm leaving this stop loss for whatever happened. I mean, when the market turn down again, but it would be happening something that the market has stopped and started to grow aggressively, and I would see from the price action specific candles at 15 and 30-minute chart that the price might be hitting new highs. I be might staying with more aggressive, I mean more short, less long stop loss, like here for example, just above recent support resistance of 57.17 points. So we have two chances. First options is to leave the stop loss very aggressively, short kind of stop loss. I mean about 20 points or 25 points, or we could leave the stop loss for another breath of the market if the market is going to turn back and move lower and lower again. More often I prefer to do something like this, or just to stop the transaction manually if it's making new highs when it shouldn't be making the upward movement. But right now we didn't have this problem because the market hit new lows, and it still probably will be getting lower and lower. We'll see about that. The first profit, it is reasonable to take first profit during the day before a market reaches some kind of retracement. It is the split the profit idea. I mean, first profit of from this transaction we can take like half position from 50, 70 or 80 pips, whatever is comfortable for you, and the second part of position you can take the profit, for example, after 100 or 150 pips, if the market will get there, of course. So we can move this stop loss to 0 point and stay with another partial position to give the market chance to, when we see how we see at 4 hour chart, might be another drop to the last support resistance at 4 hour chart, and we wouldn't like to miss it if we already took this trade based on a 4 hour and 30-minute chart as well. So we can take our profit from 30-minute chart, and we can take our bigger profit at 4 hour chart as well. It is based on multi-time frame trading. Thank you very much for listening. I hope it was an interesting classic setup of the trade after breaking out, taking the breath, testing the line from the downside, and moving downwards again. It's classic short. Thank you very much for listening.